Welcome back to the Eric Krown crypto channel where the Bull-Zooka has landed. I repeat, the Bull-Zooka has been loaded, it has been fired, and it has landed indeed, my friends. It's a 2-day time frame setup that we've been looking at over the past month and a half now, more like, has played out. I got absolutely no sleep last night because of the little bit due to the excitement, a little bit due to, well, these Dubai beds, they're too damn hard. They're too damn hard. Everything else, however, though, very, very nice. Anyways, other than that, I wanted to follow up on the higher term time frame ideas now that that major area has been hit, what to expect kind of in the short term, perhaps over the weekend, and then a few things leading on into the resulting next 3 to 4 weeks, let's say, as to how high this rally could indeed go. We'll also cover up the short term as well for like the very, very short term. And I think that's a good place for me to once again humbly request, don't forget to like and subscribe and tickle the bell if you want, and if you want some more cryptocurrency magic money informations. Anyways, let's jump into it right now. Starting off right on over here. So this again is just a follow-up on this particular setup. If you're new to this channel, it's going to look like hindsight analysis. If you've been on this channel for even like the last week, then you're probably already sick of it. It is the 2-day time frame volatility versus stochastic momentum signature. Basically, anytime that we have seen volatility at extreme lows, which defines anything below 10 percentile or more, the expansion phase that we've witnessed over the past 5 years, given that particular setup, has led to an average move of about 35%. Done over the course of about 3 weeks, and the stochastic also has been correct, getting the direction 84.5% of the time. That obviously has worked out yet again over here, also playing out that trendline regression test, and nice up and atom. So it's giving us a nice major bias for the upside. And I want to address something right here. It's very humbling. It's very, very lovely, and it's nice to tickle the ego when people say, "Hey, man, you nailed the call. You called it." That's great, but understand all I'm doing here, and my purpose with this channel is to present statistics. I would like to say the statistics properly. Statistics properly. In the best way that I can, and then let the chips fall where they may. So in this case, again, 84.5% hit rate essentially is not 100% hit rate. So I can never say that I called something. What I can take credit for is only finding and validating these setups, of which this one worked out yet again, which is great. So we've seen several of these happen even in the past year, and if you've been on this channel now, then you're probably getting the hang of it. Anyways, the reason why I bring it up right here is because obviously yesterday and the day prior and this past week, actually, we were witnessing the etchings of volatility expansion, which confirmed that setup, and the average move has essentially been hit from low to high in this case at about 35%. Now, from low to high as of right now, it's about 33%. Again, the average about 35%. So do we see another spike up somewhere a little bit higher? Definitely possible, but let's not mistake where we are in the grand scheme of things. Bitcoin is now back around the last major rejective high. This was right before the FTX Dumbola party where Sam fucked about 5 million people at once. Great job, Sam. And so these areas are going to generally be profit taking regions alongside these statistics over here, which is funny how that works out a lot of the time. Good confluence between the two. Taking it one step further, we can also go reference the HPDR indicator over here. And you can see that we are now at the top side of the 90% of historical returns range high. So this is an extreme move, and yes, because volatility was so low for so long, we do expect extreme moves based upon this. Do understand these statistics of kind of what that would be looking like, going above here. Now, I do think that overall, after a pullback, things do trade above these regions, but I do think in the short term, probably going to make sense for a pullback. Based upon that, LARP lines, funnily enough, working out. Again, if you're new on this channel, please understand these LARP lines, they're like, it's not drawn a scale. It's not supposed to be like, hey, this is exactly what's going to happen. Just kind of like hey, it's kind of what I'm thinking here. Anyways, so yes, now that we've got now that we've got that, short term, probably is a bit of a pullback. We can go over here, and in order to get potential pullback targets, let me bring up a fresh chart. I said fresh, not full as fuck, for the love of God. All right, well, this one will do. We can take a little bit of a fib pull here. So what I'll do in this case is I'll go from the prior low to the current high, and so you can see right here we have some of our major fibs lining up with, well, the 200 simple moving average, which is about 19,400, the 382. And we got the 0.5 at about 18,800. Basically, anything above the 382, in my opinion, is a very strong higher low. I'm not saying that things have to come all the way back down there. I'm just saying that anything above there is a higher low and very likely begets continuation, or obviously gets continuation, right? And then we can talk about further targets based upon that. So in the short term, yeah, things probably trade a little bit sideways, maybe one more spike to the upside over the weekend, but I would be looking for a pullback after that. And yeah, anything that fails to essentially go below that level is very likely going to lead towards more bullish continuation throughout the rest of Q1 of 2023. Anyways, where am I getting that from, or where would be the next sort of relevant areas to be looking for? Well, in this case, we can now apply the 2-day time frame setup to the 5-day time frame. So the 5-day time frame, it's the same idea here. Low BBWP volatility coupled with the stochastic oscillator's direction has accounted for these stats over the past 5 years as well. So obviously, being that it is a five-day time frame, we do expect these results to be greater, obviously, than a 2-day time frame. So you can see in this case, the average days for this particular setup, about a month and a half at 37 days. I've taken a minimum and a maximum of these measurements as well at about 29%, all the way up to 52% of what we've seen in the past 5 years. And a first standard deviation measurement as well here. So the top side of the first standard deviation would be about 50% basically. So where would that essentially put Bitcoin if it were to continue from here? Well, that would put Bitcoin basically around the summer highs, which again, great confluence, about just under $25,000. And there's probably gonna be a stop along the way as well. We're talking about a 5-day time frame, obviously. And how long could this take? Basically into like the heart of February, maybe like early March, something like that as well. There is some variance in the average days, obviously. So that's kind of where I'd be looking for on the next leg after maybe a bit of a short-term pullback, consolidation, higher low, and then continuation, something like that. I do want to state, however, that while I'm not necessarily looking for this to happen, I think that this is a little bit unlikely. If Bitcoin were to come back down and close below about 19,400 or 19,350, at that point I'd say, hey, this is a major trap, and you're going to see new lows based upon this. Personally speaking, I don't think that's what's happening. Anyways, let's now follow up on a few other things. That we were speaking about, I believe, yesterday. Let me pull up this chart over here. See how CME closed out the week, and it closed out the week in a very strong position, closed above the 21, and also confirmed several things along the way. Volatility expanding off of extreme lows right here. Again, this is one of the lowest volatility regimes that we've seen for a long period of time, which does imply that the result of it is going to be, rather large. And we also did see the confirmation of three major things actually. 1, 2, 3 drives a bullish divergence off the lows. Nice, not bad at all. Weekly Joule has closed with if you're the most patient of patient, then this would be that would be the setup, essentially. Bouncing off the slow moving oscillator. Yes, I'm using the full Joule in this particular example, and also getting positive curvature. Now, again, we identify this setup as likely in late December. So you're just seeing a continuation of this. And on top of that, we also can see over here for the weekly stochastic on CME, again, also looking for liftoff, will maintain its upside curvature also above the critical zone, and at its highest level since like summer, March, April, May. And you can see that obviously, it met the pivot, closed above 16,630. So a lot of things happening right there. Anyways, we've spoken about all of that. Should we get into low-term timeframe stochastic momentum? Let me just check the time really quickly. Maybe not. So I think I'll save a little bit more fun stuff for tomorrow. I just wanted today to kind of be a continuation of that analysis. Short-term, maybe one more spike, a little bit higher or at the current high. But after that, probably sideways, probably tries for a higher low, and then continuation is what I think is probably most likely. 19,400, the big area to be aware of for the long term. Below there, big problems. Until then, everything's a higher low. Everything, likely tries for more continuation throughout the rest of Q1 of 2022. So I'll leave things off at that. I want to be wishing you the best as always. Take care, much love, and see you hopefully soon.